Welcome to Phillip Highlights. I'm Tiffany and I'll be serving you the latest news of the week. Your news, our business. Global markets traded mixed in May as investors watched carefully for the signs of progress in the US debt ceiling negotiations ahead of the 1st June deadline. On 28th of May, it was announced that the US President Joe Biden had finalized a budget agreement with House Speaker Kevin McCarthy to suspend the $31.4 trillion USD debt ceiling until 1st January 2025, and that the deal was ready to move to Congress for a vote. To recall, the debt ceiling has been raised nearly 80 times since 1960, indicating that it is not something new and it is just a recurring practice to adjust the limit on the amount of debt the US government can incur. Throughout history, the US has never defaulted on its debts, and we expect that measures will be taken to prevent a default in the current situation as well. In April 2023, the US headline PCE price inflation experienced a monthly increase of 0.4% compared to 0.1% in March 2023. This was primarily driven by a rebound in the goods and energy prices and a faster rise in services charges. Furthermore, the core PCE inflation surpassed expectations by rising 0.4% month-on-month. As a result, the Fed's preferred inflation measure accelerated to 4.7% year-on-year in April 2023, compared to 4.6% in March 2023. Contrary to market consensus prediction of no change, considering the higher inflation reading and the resilience observed in the US economy and labor market, we believe that there is now a higher probability that the Fed may consider another hike at the upcoming FOMC meeting in June 2023. In April 2023, retail sales volume in the UK experienced a rebound of 0.5% month-on-month compared to a decline of 1.2% in March 2023. This was attributed to a higher sales and increased government benefits. On an annual basis, however, the decline in retail sales volumes slowed to 3% year-on-year in April 2023. Despite contracting for 13 consecutive months, this decline was the smallest since February 2021. We believe that the persistent and elevated inflation, particularly in food prices, acted as the primary constraint on the consumer spending and retail trade growth in the UK. Although CPI slowed to 8.7% year-on-year in April 2023, compared to a 10.1% in March 2023, the slowest since March 2022. The core CPI rose to 6.8% year-on-year, the highest since March 1992. Based on this, we anticipate that the Bank of England will consider another interest rate hike to mitigate the inflation that remains above its target. According to the Malaysian Investment Development Authority, Malaysia attracted approved investments worth 71.4 billion ringgit in the manufacturing, services and primary sectors for the first quarter of 2023. Of these, domestic direct investments accounted for 33.9 billion ringgit, reflecting domestic investors' renewed confidence in Malaysia's economic progress and prospects. While foreign direct investments contributed 37.5 billion ringgit, we view this as a positive as this will generate favorable spillover effect on the wider economy, fostering sustainable economic growth. While this year is expected to be more favorable for investments than the previous year, it is important to stay watchful for any market volatility. PhillipCapital Malaysia provides a comprehensive list of products, including discretionary private managed accounts and unit trusts that are offered to retail investors, high net worth individuals, corporations, and institutions. Whether you want to DIY, seek for advice, or let the expertise fully handle your portfolio, our platform can cater to your needs and preferred way to achieve your financial goals. That's all for today. Stay tuned for the next Phillip Highlights. This update is brought to you by PhillipCapital, your partner in finance.